Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kirkendall. John and his team of financial, legal, and tax professionals have been providing North Florida savers and investors sound, comprehensive financial guidance for over 30 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting gulfcoastfinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, as named by the readers of the Lake City Reporter. 8 years and running, they are the team from Gulf Coast Financial Services, celebrating 30 years serving North Central Florida, proactive savers and investors. Founder and CEO John Kirkendall here with us, as always, helping us to remain financially focused. And John, this time of year, and maybe we're a little on the early edge of it, but we start thinking about the fact that all of those tax forms are going to begin to show up. And in study after study, survey after survey, one of the things that savers and investors say they want more of is more proactive guidance on tax planning, because nobody likes taxes, nobody likes overpaying in taxes, and yet we all feel like we are.
Well, it's kind of like insurance. It's something that you don't really think you need, but unfortunately, with the taxes, we have to have it. So the government's going to get their share one way or the other, Peter. And so it's just something that is here. We dread it. We don't like to pay the tax man. I know that, when that April 15th comes around and I send that check, it drives me crazy to send them the money. But, it's a necessary evil in order to run the government and to do the things that we have to do as a government. So sure. They're here. And it has been worse. I mean, back in World War II, in 1945, the tax rate was 94%. So, it's a lot different. I mean, how would you like to have to get 6 cents on every dollar you made and give the rest to the government? So, I think that it's here. It's something we got to do. Unfortunately, a lot of people don't realize that income, particularly in the types of income that we have to pay taxes on, will really affect your retirement and make you pay more taxes and more fees in retirement than you really think. I've often said, getting old and retiring ain't easy.
No. Well, and you bring that up. I think that there is this perception in the back of our minds that there are some tax secrets or strategies that only the wealthy can use. Now, the tax code applies to everyone equally. Maybe the wealthy have higher paid accountants to dig through the tax code at a little bit deeper level. But contrary to our desire to control and minimize taxes, as you just indicated, John, a lot of the way that Americans have been set up and taught to save for retirement actually leads us to being in a very high tax exposure in retirement, not controlling it, but rather leaving us exposed to it.
Well, that's right, Peter. I mean, we have that required minimum distribution at age 72. And that seems like a long way off, but it gets here quicker than you think. And the required minimum distribution can throw you into a different tax bracket. All of that money that's coming out of those deferred accounts is taxable. And so we have to pay the taxes somehow. And even if you don't want it, I have clients right now that don't need that required minimum distribution, but that money's coming out every year and they're having to pay taxes on it. And it's bumping them into a higher tax bracket for all of their income than they necessarily would. It's the old story of, do I want to pay taxes on the seed or the harvest? And so what we've been taught in America is we should tax defer, because we're in a lower tax bracket now than we're going to be in later. And what we're finding out is that as we progress through this thing, that taxes aren't going to get lower. Taxes are going to be higher in retirement than they are while you're working. You have more deductions when you're younger. You've got the kids. You've got all those deductions that you get that you don't have when you're older. So therefore, you're naturally in a higher tax bracket. But we've been taught just the opposite. And so while we talk about the fact that the rich don't pay the taxes, actually, there's 10% of the population that pay 90% of all taxes. Now, we never talk about that number, but
and I know that our tax brackets are a progressively increasing structure, meaning the more you make, the higher percentage of those next dollars that you do pay. But I still think that nobody thinks that it's completely fair in the way that it's set up. But John, would we benefit from a more proactive kind of paradigm and way of thinking about proactively preparing for taxes rather than preparing the documents and filing taxes retroactively based on last year? Would that make a difference? Do enough of Americans think about taxes in that kind of proactive perspective?
No, I don't think so, Peter. I think what happens is that most people think that they get a tax preparer to do their taxes, and it's after the fact. I've already made the money. I've already spent the money. I haven't thought about how it's going to cost, how much money it's going to cost me in taxes. What we need to do, and what the reason that we started Gulf Coast Tax Advantage was we wanted to be able for our clients to sit down with them and proactively plan their taxes during the year, not at the end of the year, but throughout the year. So as I've said on the show several times, there's an example of where we had a client who was going to take $10,000 out of their retirement account. That $10,000 was going to cost them $4,000 in taxes. Because as you said, taxes are progressive. And so by taking that $10,000 out, they would have hit the next tax bracket. Now, all we had to do was wait till January and take the money out, and the taxes were a lot less. So we have to plan, we have to be proactive. But, there's a difference between tax preparers and tax, what I want to call is people who will help you throughout the year with your taxes and make sure that you're trying to pay as little taxes as you want. There are 800 different tax forms. And no one person can go through all those forms and know all the things that there are to know. We're still learning every day. But there are also 80,000 new IRS agents who are going to help you make sure that you pay enough in taxes.
Yeah.
But, I think it's a situation where our clients, we want them to be proactive, plan throughout the year. If they want to do anything, buy a house, sell a house, we want them to let us know so that we can show them what it's going to cost them in taxes and how we can structure the deal so that it's best for them.
Now, again, John, as we mentioned at the beginning of the program, savers and investors, by and large, when asked, would they appreciate, do they need more proactive guidance on tax planning, say, absolutely. That is something that most desire and are seeking out. However, the status quo approach to investments really leaves that as an unaddressed area of our comprehensive financial progress. I find that striking because we all have heard the phrase, the saying, it's not what you make, it's what you keep. It's not what you have, it's what you get to keep. And taxes are the biggest thing in between those, and yet it's left unaddressed. So I guess let's, if you don't mind, dive into where are some of the opportunities that you are helping people, proactive minded planners, identify where we could be more tax efficient. Where are you helping your clients in identifying and realizing these opportunities?
Well, I mean, certainly we're looking at Roth conversions. We would rather have, we're getting clients to put money into Roths earlier so that instead of deferring the money, we pay the taxes on the income now and we put it into a Roth 401k or a Roth IRA. That money then can grow tax free and come out tax free. So I'm not paying taxes on the gain. Health savings accounts. We want our clients to maximize funding on those, because that money will come out tax-free, and it's a way that we can also pay for medical costs. Qualified charitable contributions, we've been working on that for the last couple of years, Peter, having our clients who aren't itemizing so they're not really getting credit for their charitable contributions, have that money come out directly from their retirement accounts, their deferred retirement accounts, so that that money doesn't count as taxable income. That's a big one, and it's been a way that we've saved. The other thing that we've done this year, Peter, is we've been very proactive in tax harvesting. We've looked at our accounts to get an idea of how much capital gains and dividends mutual funds we're going to be paying. And we've sold those before the dividend date. We've also looked at losses and selling losses, especially this year, going forward, so that we can take those losses off our taxes. Life insurance, certainly a good way to defer money, put money into a life insurance account and then have it come out tax-free at death or for tax-free income as long as we keep the policy in force. Those are just some of the ways that we've tried to instruct our clients on how to be more proactive with their taxes.
But you have to be informed, ladies and gentlemen. Many of these things you have to take careful planning steps ahead of time to realize the potential benefits from these strategies after you've identified that they are appropriate for your situation. I think that the complexities involved with comprehensive tax planning and management is one of the reasons why, John, so many are seeking it but not finding it. But that's, again, I think one of the true values and benefits there of Gulf Coast Financial Services and the sister company all under one roof, Gulf Coast Tax Advantages, that you can take a look at those things in combination, the cohesive financial and tax angles that ultimately will come together and will equate to what we actually get to realize from our dollars, from our money. So, ladies and gentlemen, if you're looking for that proactive kind of guidance, if you're looking for opportunities to better control, minimize, or even eliminate in potential places unnecessary taxes, if you'd like to quantify what your tax liability looks like this year and in years to come, those are services available there at Gulf Coast Financial Services. Pick up the phone, give a call, 386-755-9018, 386-755-9018, 386-755-9018. Get that financially focused written retirement income plan. The proactive tax perspective is just part of that, showing you where to create income, how to position assets, the correct order of operations, and identifying risk issues and tax opportunities to better control that tax liability. John, it's really eye-opening for many savers and investors when you help them quantify what that tax liability might look like years into the future if they do nothing and sort of just defer to the IRS's plan for them versus being proactive, and what kind of savings that could help them realize.
Well, I think that's the difference between the average saver and the person who has money. Person who has money is concerned about taxes. They're trying to do all they can to pay as little taxes because they're paying enough. And so the average investor, he doesn't think about saving money for retirement or for taxes. So what they're doing is like I said, they're not being proactive. But, Peter, one thing that I wanted to mention on this show, and I just came up the other day, home real estate has certainly increased in value. And unfortunately, we've never increased the amount of money that you can sell your house for and not pay capital gains. So it's still $250 for a single individual and $500 for a couple. And when we're seeing houses sell for $600,000-$700,000, there are some tax liability there that I don't think people are thinking about because they have in their mindset, I can sell my house and I don't have to pay taxes on it.
Yeah. Yep. All aspects. I think every dollar ever earned, created, grown, transacted has some kind of tax plan associated with it. There are a few opportunities for some lenience or tax-free transactions within limits and limitations. The tax implications of buying, selling, transacting your primary residence, ladies and gentlemen, no exception. There are rules and guidelines there that will dictate what you may be able to profit without tax, but certainly a threshold to that, and there will be taxes thereafter. You've got to understand that. And John, there are in the grand scheme of things, certain assets that are better for specific purposes, in many cases due to the tax implications. So IRAs, those are retirement accounts. They're really intended for retirement, not the best vehicles to be left behind as far as an estate or generational wealth transfer tool. And I think the IRS has really kind of cemented that with the Secure Acts that they've passed over the last several years and 10 years, in that the IRA was never really intended as a generational tool, and they've kind of doubled down on that.
Yeah, we've eliminated the generational problem because what's happening is, because of that Secure Act, if we leave the IRA and all the money is in deferred accounts, 401ks, IRAs, whatever, then you've got 10 years after the spouses are gone in order to take that money out. Now, there are certain exceptions, but they're rare. And, they don't apply to everyone. So we can certainly leave a huge tax liability to our kids and our heirs if we leave all IRAs and all deferred accounts. And, Peter, it does make a difference how we take money out of retirement accounts, or how we take money out of our accounts during retirement. We want to pull as little as we can out of our retirement accounts. But at the same time, if I can pull more out and still be in the same tax bracket, why would I not want to do that? Mm-hmm. So there are things that we can do, things that we need to look at to make sure that we're maximizing how we're taking money out of our accounts during retirement.
Planning proactively can make a big difference. It's so important, ladies and gentlemen, that you take a look and review and evaluate not only the investment portfolio, the retirement accounts, the funds that you hold, but their tax implications and how you may be able to be more tax efficient and keep more of what you make, keep more of the money that you have worked so hard to build and save and invest. And that's, I think, all of our end goal. If you would like that kind of proactive guidance, that financially focused plan, pick up the phone and give John Kirkendall and the team at Gulf Coast Financial Services a call. 386-755-9018. That is 386-755-9018. 386-755-9018. John, I know that we could probably go on and dive into and have full episode conversations about very specific tax strategies. And we may do that in the year to come so that people could get good information on some specific strategies that are available. But I think for this conversation, high level, many are looking for tax planning. Not many are getting it. And that's why you formed a sister company, Gulf Coast Tax Advantage, to complement Gulf Coast Financial Services.
That's why we did it. Yeah, Peter, we wanted to be able to provide that service. But also don't forget that, taxes are kind of like your 401k when it's losing 20%. You want to throw it in the drawer and not look at it. Taxes, people don't want to think about taxes until the end of the year when they sit down and start to prepare for April 15th. And that's the wrong way to look at it. It's just like how we need to be proactive with our investments and make sure that our investments are making as much as they can and not losing a lot of money. We need to make sure that we're doing everything we can to not pay any more taxes than we have to, but at the same time pay what we're due.
All right. Give John Kirkendall, Gulf Coast Financial Services, a call, ladies and gentlemen, for a quick conversation, questions and answers over the phone, a complimentary opportunity to sit down for that review and strategy session for the plan design of your financially focused retirement plan or an investment portfolio review, that forensic financial analysis. 386-755-9018, 386-755-9018. John, as always, a pleasure. Thank you for being here as our resource.
Thank you, Peter. Great to talk about taxes today. Look forward to the year and what we're going to have.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kirkendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.